Hello, everyone. Thank you, Kevin. Well, we'll start out with the investment market by saying Boston has definitely had a dynamic year in 2014. Investors love Boston. The human capital at colleges and universities, stability and durability of education, financial and healthcare sectors, as well as the dynamic growth potential with life sciences provides the legs of the stool that's the investment platform in Boston. The greater Boston submarket investment sales volume was up 58% year over year. This is all sales volume, all products in greater Boston, not just downtown. As you can see by this chart, that we're still below the peak of 2007, but admittedly well above 2009's bottom. It would appear we still have some room to run. As well, we reached for the first time a new peak in average sales price per square foot. Again, this is all product types, and geez, it only took us 7 years to get there. What we still have, though, however, is a bifurcated market. We have a market of downtown and Cambridge, Central 128 in the suburbs, and then everything else. Highly desirable in the blue circles, as you see, and everything else, well, we have to think about it. What's notable about the first part, which is downtown market itself, is that in 2014, there was a tremendous amount of foreign capital that came into the market. 46% of 2014 sales is what we found had some level of foreign capital in it. Some notable sales, as you can see here on this map, kind of point out Canada, Norway, Switzerland, Japan, and Ireland, which you've probably heard a few times before in Boston. All were significant in Boston in 2014. Boston itself was even greater than the overall market as far as sales volume growth, with 177% year over year sales volume. Significant sale that Ron had mentioned earlier was the Oxford JP Morgan acquisition of over $2.1 billion for these multiple assets, including one in Cambridge and several in downtown Boston. What's also happened is institutional equity has looked beyond just Class A assets, and Class B office has hit record pricing as well in 2014. Two such sales were by Zurich, which maybe they have a New York office, but we know where it's coming from. 51 Melcher Street and 51 to 63 Franklin Street, which we were actively involved in, ended up having a $513 square foot sale price as well as $415 a square foot. What was interesting about these two sales was the neighborhood and how much that really drove the sales and the process and the interest. Of course, Melcher Street being part of the Four Point Channel and Seaport area, everybody knows about how much growth has been going on there. But what's interesting is seeing Franklin Street being part of the downtown crossing area. What was key here was the Red Line, things like Sonos moving to the area, and of course the new Millennium Tower, which in 2016 should be open, being built just a few doors down from this complex. So with traditional investors, how do they compete? Well, what we found is with equity office and CBRE global investors, value add is how they pursued it. Vacancy with the ability to try to fill in the holes and increase returns that way. And with 100 Cambridge Street, which Colliers is involved in, is selling a leasehold interest, which had basically a return premium due to that reason. As we move to the suburbs, what we found is there are a number of groups that were pushing out further to the suburbs. Why? Looking for yield that's better than downtown Boston and Cambridge, looking at 4 to 5 caps becoming 7 to 9 caps, as well as looking at the value in per square foot throughout the market and better yield overall. The suburban investment predominantly has been private and domestic, not as much in the institutional side. We noted that 57% of the suburban trades, not total sales volume, was to private investors. Some examples of the suburban sales that happened in 2014 include 1 Vandergraft Drive in Burlington for $247 a square foot, which Cornerstone harvested to TA Associates after owning it for 17 years. 5 Wall Street, which was just built in 2008 by the Colliers Company, sold to Piedmont, a real estate investment trust, for $343 a square foot. 800 South Street in Waltham, another asset owned for over a decade by the seller, sold to Intercontinental for $275 a square foot. And then lastly here is 850 Winter Street in Waltham, which sold for $404 a square foot to GI Partners out of California, but of note is a significant portion of this building had laboratory space, hence the higher price per square foot. The last component we're focusing on this evening here is the industrial submarket. What we found is it's a constrained market with a very high level of demand for anything industrial. It includes Class B warehouse as well as non-warehouse assets, all of which are being heavily pursued. An example of this is a new listing that we have coming out. It hasn't even been pushed out the door yet, 326 Ballardvale Street, owned by Reef. It's about 300,000 square feet of warehouse, and we've had an unbelievable amount of interest in it before we've even been able to push it out the door. All of this is basically driven pricing for Class A warehouse to new highs. So 2 examples of that: 55 Lyman Street in Northborough and 20 Freedom Way in Franklin, both Class A 30-plus foot clear warehouses built plus or minus 10 years ago, sold for $103 a square foot and a cap rate in the low 6s. Another example is Industrial Flex, with a transaction we were involved in, 267 Lowell Road in Hudson, New Hampshire, and 25 Industrial Ave in Chelmsford, sold for $123 a square foot, although a yield approaching 8%, sold by the Campanelli companies and purchased by the Ram companies out of Maine. So, with our New Year's resolutions, how to look at 2015 on the investment market. The first piece, downtown. We would say be very disciplined. As pricing and rents have increased significantly over recent years, we have to be a little bit more careful. Not afraid, just careful. Suburban market. Be selective about product and location, as all locations in the suburbs have not yet healed in the past several years, as we might have seen in central 128 suburbs, Burlington, and other places. And industrial, we would say buy any functional, non-specialized industrial real estate, space that is relettable. There's just not enough of it out there, and it doesn't have to be Class A. Class B works just as well. With that, we now introduce Ted Krasikis, who will give us our retail overview. Thank you.